we have, all right. And so our program will be first, we'll have a little intro on Vectors Angel, on what we do and our activities and which startup will be presenting today. And then we will have pitches of the 12 companies that will pitch with us today. Each pitch will be 5 minutes each. I will give a mark on the screen when you have like 1 minute left. And after the pitch, we will have a poll for investors to fill in on what you think about this company. And if possible, we will share the poll right after the 2 minute time that we ask you guys to fill out the poll. And after the 12 pitches are done, we will have a kind of networking and Q&A session for the startups and investors that you guys can talk more on each questions that you may have and maybe spend the time getting to know each other. And so, Jane, are you here?
Yeah, I'm here.
Hey, okay, let me see. I think, oh, my audio is not connecting somehow. Let me see. All right. Um, I cannot hear you, Jane.
Yeah, I
Okay.
can.
All
Yeah,
right. All right. Yeah, I'll hand it over to you.
okay, all right. Thanks, Pinky. Uh, I'm going to do a very quick intro. Hopefully, it doesn't take too much of the time, and we'll get started. And we're just also using the time for go to rolling in. So let me share my screen. Yeah, so for our investors already with Vectors Angel, you probably know about us. If you're new, I'm happy to just give you a quick background. So Vectors Angel, thank you all for coming in today, and hope you had a wonderful holiday and a happy New Year. Yeah, let's see. Okay, so
There's a scroll button. Okay.
all right, so who are we? We are Angel Investment Group, focused exclusively on impact investment. So we have the sustainability and healthcare. So those are the two areas we focus. And why we call us vectors? Because we believe in the positive impact and financial return are a wonderful vector, and they can be both enriched, and also we're happy to uncover those underserved sector value. Sustainability investment, I'm just using sustainability as an example, it has been really on the rise. So for those people who are, following the stock market, Tesla just went over the roof, and for renewable energy and like alternative energy or sources, it's really the trend ongoing. And with the public market really performing, the big companies are getting their contracts. The small startups are getting their opportunities too. Similar with the healthcare companies, their financial return are always really really strong. Um, so why angel investors? Because we believe the angel investors, you have the money, you have the resources, you have the network, you can help the companies if they want to reach out to you. And that it's at the earlier stage our companies actually struggle most. They need some guidance, they need some help, and also it's really very fun activities for the angel investors to participate. So our current process is that our entrepreneurs, they submit the deck to our deal day. We also have our internal pitches, and we complete the technical business due diligence. And we will, if we decide to invest, our deal team ourselves, we'll cover angel syndicates, and then we invite the rest of you to join us. We will give you the complete memo on why do we want to proceed with the investment, including the reasons behind everything, and then return multiples. We make it very straightforward. Some sectors have better return multiple than others, but if you're really dedicated on impact investment, you will know like not every sector is like software price go skyrocket. material science innovation, it takes longer, the return is lower. But we hope there are angel investors want to support those companies. That's why we initiated those group. Hopefully, we can get the angel investor who are keen on those field. However, for any reasons, we decided to pass the company. Maybe because they're too early, maybe because we don't know the sector as well, or whatever reason. But because we asked the deal team to invest ourselves, if we don't feel comfortable with it, we pass it on to the newsletter, and you can work with them directly. And I believe among our audience there must be an expert in a different kind of field, and then you will be able to help the companies along the way. Next. Yeah, so if you're an entrepreneur, go to our website to submit your deck. And if you're investors, you can submit your investment preference here, also on our website. And after you fill out the form, there will be a Slack channel for you to join in. And you can talk to us directly on the Slack channel, or network with each other if you want to. All welcomed. If you're interested in joining our team, we have three ways to do that. So we run the investment fellow program, which is for very talented individuals who want to learn more about investing, or just early stage investment, impact investing in general. So the deal team provide a hands-on experience, help them to go through the entire process. We'll talk a little bit more later. And if you're more experienced, you're actually working in a VC, you're welcome to join in and apply to our team as a venture partner or deal leads. That you will be the one actually helping the investment fellows throughout the entire process. And we're also very collaborate with all the kind of VC funds we work with. And we are also looking for legal partner to join our team, who is also angel investor to look through our term sheets once more. And I think, yeah, just quickly introduce myself. I'm a venture investor. I work in the corporate venture on renewable energy. That's a little bit my background, so that's my own specialty. But we also have the deal leads in the healthcare area, sustainability area, who also work in VCs or corporate venture, but would like to do this on the side, to do more angel investment. Yeah, so we're also going to initiate a new program called a Larger Check Accelerated Deal LP. So if you have large check, normally you're giving out, for example, a single check size is 50K or more, and we're happy to have a conversation with you to bring you into some of the accelerated deals. Our current process, calling for a syndicate is sometimes it's a little slower for those really fast-moving deals that already have a really nice renowned lead investor. For those kind of deals, it's also financial return is relatively more certain because more people have done the due diligence on them. So that's why we are going to initiate this program to have more larger check LPs to work with us on a accelerated basis, and obviously you'll have more priority access to exclusive deals. They sometimes go by really fast. You have like 1 week to make decision to wire money, otherwise the deal is gone. Yeah, and then we're happy to tailor towards your interests. You're more interested in a sustainability deal or the healthcare deal. We're happy to talk to you. All right. And we also have angel investing venture course that in our pipeline. We do have a lot of people apply to our investment fellow program, and we really see so many people want to get into impact investing, but unfortunately we cannot host that many people at one time. So we have decided to put together a venture course. We're still in the design stage. Probably we'll get it out in a couple months or more. That you will learn about how to evaluate a company, just the entire DD process, valuation, deal sourcing, case studies. I mean, we welcome all the angel investors if you're interested in how to do this more systematically. You're welcome to participate. But if you're a startup founder, you just want to know how the venture world is thinking, you're also welcome to sign up for the course. Clean tech and healthcare are very different sector, and the way that they run due diligence are also very different. So we're also we'll also put separate track for those people who are interested. So stay tuned if that's something you're very interested in. Yeah, so now I will move that to Ping. And thank you all for coming. Ping, I will have you to have the screen share.
Sure, thanks. Let me continue. Okay, everyone see my screen? Okay, so the order of the presentation today will be Ferntech, BioExplore, Swirltex, SynderBio, Fixing CO2, PainQx, Mark Labs, Hope Hydration, Reservoir Neuroscience, Advanced Microbubbles, WearLinq, and then Aether. And then after that, we will have Q&A or a networking session in the end. So we will have breakout rooms for each startup, and you can choose to join the breakout room of the startup that you're interested in and to talk more. And we welcome everyone to bring in future companies for our deal days. We are always looking forward to look at companies that are working towards the betterment of our world. And so if you have a company that you're personally interested in, then feel free to bring those in. So for this day is not a demo day, and it's actually an initial screening of the company. So basically we will decide whether we will interested in your company or not. And it has to fall into our major impact areas, which right now are sustainability, clean tech, or healthcare. And we prefer seed stage, or at least like Series A companies with strong product with customer traction before scaling. And so we wanted to gather insights from both angel investors and VCs on these companies, and that will help make us make better decisions. And we will decide which companies will go into due diligence process based on your feedback. And I guess like another thing I would like to ask is in our polls, since I cannot limit like which participant fill out the polls, I would say that please for only for investors and VCs, and then I would want to kindly ask that startups don't please not fill out the poll yet, because we really want investors feedback, and that will be accurate feedback for startups as well. And we do have these deal days for about 3 months, once in every 3 months. So if you're a startup right now and you're not pitching with us today, you also have the option to sign up, and we will ask you to participate in our weekly pitch meetings, or you can also wait for our next deal day in a couple of months. So yeah, thank you so much. And now I'll pass it over to Ferntech for the pitch.
Hello, can you hear me now?
Yes.
Okay, great. Well, hello everyone. Good afternoon, good night for me. I'm dialing from Germany, from Berlin. So thanks, Vectors Angel, for the opportunity. And thanks for putting me the first one. I'm not sure if I'm gonna be able to last until the Q&A, since it's gonna be quite late here, but I'll do my best. I guess I have around 5 minutes, right? So
yes.
I'm gonna share my screen. I'm just gonna jump to the presentation. I guess you see my screen now, right? Okay, great. Well, yeah, my name is Joan Tarragó. I'm one of the founders of Ferntech, and we are creating the future of smart, decentralized energy. the need to address the causes of climate change are pretty much clear for everyone, or almost everyone, and also energy from solar energy or renewable energy in general is now the cheapest way to provide power in most parts of the world. So there are several effects driving the size of this already truly massive market. So in principle, the centralized power is a great opportunity, but nowadays these quite complex systems are normally not working very optimally. They are expensive to maintain and they are not easy to scale. So the first step to solve this is to gather more data, know what's going on those systems. But the problem is, one thing is to collect data, but it's really hard to have a real insight and knowledge on what is actually going on in the systems and how are they performing, especially when the human factor is involved and the operator is responsible of operating hundreds of systems. So it's not easy to get a complex power system to run efficiently in a remote location, and optimization is always required. By nature, these type of renewable energy systems often have either too much or too little energy available. So what we do at Ferntech to solve this problem is to, first of all, collect real-time data into an online portal that can create insights of what is really going on in the entire system or the entire fleet of systems. Then we can optimize the systems by running control algorithms according to what is required in order to optimize the system performance. So these can be set up and changed anytime remotely by our customers using the web portal. Here are just some examples of some of the advantages that some key features that our customers use. So the first one is Niotech. It's a mini-grid developer in Nigeria, and they can freely mix components from any manufacturers of their generation assets using exactly what matches the requirements of the system, saving money, and basically they specifically want to avoid being locked into a single inverter manufacturer's portal, for example, or monitoring solution. The second one is Equatorial Power from Uganda. They run mini grids in Uganda and other countries in Africa, and they use our portal to carry out powerful diagnostics. So in a way, they can be able to remotely assist a semi-skilled technician to resolve a problem, avoiding high costs and delays of traveling to site, especially important now because of the COVID-19 problem. The third one is a company in Chile, Wireless Energy. They use typical diesel-powered systems in remote parts in southern Chile and Patagonia, and they use Ferntech to make it possible to turn these systems into efficient hybrid battery power systems. In that case, it's for mining industry. Our controller operates the diesel at optimal load levels according to the requirements of the system. So we have customers in 5 continents. We operate in different environments, and we actually can get customers and support customers entirely online. So there is no need for us to go on site. We can train and support technicians anywhere. For example, we are now training technicians to deploy 120 mini-grids in Senegal, fully online. We can continue using this process to grow, and it's quick, efficient, and flexible for us. This is a big sector. We estimate a spending of 1 trillion over the next 10 years, and monitoring and control technologies accounts for more than 1% of this. We captured just 2% of that market. That's about 200 million over the next 10 years. Plus, there is a really huge retrofit market too. So implementing monitoring solution in old systems. So we can provide fit-for-market solutions in several sectors: energy access, remote telecom, and commercial and industrial applications. So these 3 very large sectors really hedges Ferntech's risk on being reliant on a single market. So we have 2 revenue streams: one-time payment for manufacturers or developers, and SaaS fees for operators. So our approach is a no-touch approach for new customers or systems. So in a way, our portal allows the customer to set everything up as they wish, and that allows the customer to scale and to service many different markets at a very competitive prices. Some of our competitors have been doing this for many years, like Siemens or other brands like ABB are really expensive. Other brands can offer really basic monitoring solutions, locking the customers into buying a single brand. And then we have a few direct competitors. We are aware of the strengths and their weaknesses, and we believe we can compete easily, especially when it comes to scaling up to large fleets with a no-touch approach.
Your time's up. Your time's up.
Okay.
Let's finish up.
Okay, just to finish, we've raised 1 million so far. We're part of the portfolio of Factory Ventures, VC based actually in Colorado. And we're part of the portfolio of Share Foundation. So we're looking for 400,000 euros now as a bridge round, hoping to raise a pre-Series A towards the end of the year or beginning 2022. Yeah, that's the team. Have interest and passion on off-grid systems. And well, as I said, well, the time is over, so I'm not gonna be explaining more, but as I said, I'm probably not gonna be able to stay in the Q&A. So here you have my email address in case you want to contact me. We'll be happy to continue the contact through email or arrange another time for a quick chat via Zoom. Thanks a lot.
All right, thank you, Sean. Okay, I'll put out the polls for Ferntech, and we'll spend 2 minutes for you to fill in. While I think the next BioExplore, Mark, if you're there, you can start setting up your screen and get ready.
Sure.
Swirltex, you can come up, and Melanie, if you're there, you can set up your slides. Okay, we have 30 seconds left for the poll. If you haven't filled out, please kindly give us your opinion about BioExplore. All right, cool. Time's up for the polls, and Melanie, I'll hand it over to you.
Great, just checking if you can see my screen clearly and hear me okay?
Yep, perfect.
Awesome. Okay, hi everybody, good evening. I'm Melanie McClare. I'm calling in from Calgary, Alberta, Canada, and I'm the CEO of Swirltex. We've created a new form of filtration at Swirltex. So our vision is to unlock water recycling and reuse opportunities for the toughest streams of wastewater. And we use membranes, which are a high-tech porous material that allow clean water to pass through and keep dirty water behind. We use those where they've failed in the past. A membrane is various pore sizes. Ours is under 1 micron in size, so it doesn't allow even bacteria to pass through. And we use off-the-shelf membranes. So this technology has been around for 40 years. We use it in a novel way, which I'll describe here. It's really an easy process to understand. It's a 2-step process. We use buoyancy manipulation, whereby we inject a gas at the right bubble size and pressure to attach to the contaminants within the wastewater. And then we swirl, hence the name. We spin the water through a tubular membrane. The net effect of all this together is an increased capacity of the membrane for less energy, a fraction of the energy, in fact. So customers can spend less money using fewer membranes for the same flow rate, and they can spend less on cleaning cycles and energy per gallon. Our leadership teams consist of water experts from around the globe. Peter Christou has been around the world commissioning water plants. He's our founder and inventor. I've got an MBA and a chemical engineering degree, and I was in 10 years in water and wastewater before joining Swirltex. Jay sits in Houston. He's our director of US operations. Anders on our board. He's a partner at Mazarine Ventures, who's leading our current round. It's a technology focused fund that's for early stage water technologies based in Chicago. Dr. Al Rubai is our director of R&D, and we have a network of advisors who've built water companies in their past. So currently we're operating for revenue in municipalities, airports, and oil and gas here in Canada. And we're looking to unlock the water recycling and reuse market, $22 billion market, and across multiple market segments using our technology, which is a platform technology that can be used across multiple market verticals. The applications that make sense for Swirltex are helping customers recycle their wastewater, treating the oily wastewater that comes out with oil and gas called produced water, pond treatment or augmenting lagoons and ponds, or helping customers with failing infrastructure by polishing on the back end of their existing system, or RO pretreatment, like in desalination, for example. We stack up against many other types of filtration technologies. We're not just competing against membranes, but what's different about Swirltex is we create a very high ultra-filtered water for less cost. So the customer can essentially have fewer unit operations to achieve an ultra-filtered quality water, where they could never do that in the past. We approach the market in a unique way as well. We do capital sales, but we're doing hardware as a service to our customer base. And all of our revenue to date has been in hardware as a service. And what that means is we build modular systems that we can deploy to site easily and seasonally for customers that might not want to spend 10 million on a CapEx project. They might want to use a wastewater treatment plant seasonally or during a turnaround or a harvest, for example. So as an example, we're at a stormwater project for an airport and moved that same unit to a municipality, then irrigated a golf course with sewage. So it's one unit, one design, two completely different market vertical applications. So we've made traction in 3 market verticals this past year. We crossed into revenue finally. We're excited about that. We filed another patent this year, and we're raising some capital now to grow in preparation for our Series A, which will be late 2021. So Q4 2021, we'll be raising a Series A. And we're raising $1.25 million US. Our lead is Mazarine out of Chicago. It's a convertible note round with a $6 million cap or 20% discount and 8% interest rolled into the note. We've filled already $1 million of the round, and we're looking to top up $250,000 with support from Vector and other angel groups in and around the area and strategic fits for clean tech. The funds will be used to match our Canadian government grant to scale up to commercial scale with an oil and gas key customer for sales and marketing activities and growth, as well as product development and starting to enter into the US with pilots. We're very excited about that as we continue to iterate on our patents. Thank you, and happy to take questions at the breakout session later.
Thank you. That was quick. Okay, thank you so much. I will launch the polls for Swirltex. By the way, Vector's Angel is syndicating for Swirltex. So if you're an investor and you're interested, please contact us. We will be very happy to share the information and would love to have you join the syndicate. So next up, I think fixing SynderBio. You could set up your screen share while the polls are filling in. Okay, if you have questions for the startup, feel free to type the questions directly into the chat as well. Okay, Mike, we'll hand it over to you.
Okay, hi, I'm Mike Cable, CEO of SynderBio. I have with me my two co-founders, Sarah Vigmastat and Michael Henry. I'm going to tell you about SynderBio, a company with an exciting new technology for cell isolation. As a first application, we're poised to provide a high-value sample cleanup step for single-cell sequencing. This is a terrific unregulated entry market with an existing large and growing customer base. Many of these users are doing cancer research, and for this, SynderBio provides an additional value in the specific isolation of malignant cells. The second diagnostics market is where I'll start. My slides don't seem to be, there we go. Cancer treatments are increasingly guided by genomic information obtained by sequencing the cancer cells from a patient tumor. This additional information can be used to provide much more personalized treatment for each patient than the sole reliance on the century-old method of visual inspection of cancer cells by a pathologist. But getting good sequencing results for these samples is difficult. There are typically many more normal cells in a tumor sample than cancer cells. Visual inspection and manual isolation is the predominant method currently used to improve this ratio. The problem is shown here. A trained pathologist must find these relatively rare cells and remove them to provide an enriched sample. Finding them can be like the traditional needle in a haystack problem. The SynderBio approach removes the non-cancer cells, effectively solving this problem by the well-known method of burning down the haystack. This analogy is an apt description of what we do. We literally destroy the non-malignant cells by use of a patented core technology. We apply highly controlled levels of fluid shear stress to the cell sample in a way that takes advantage of intrinsic cellular differences in their resistance to this stress. The cells with resistance below the level we apply are ripped to fragments. Mechanical lysing is the term we use to describe a process similar to chemical lysing, but we actually use no chemicals or labels. This is a strictly biophysical process. After our mechanical lysing, it's an easy process to separate the whole cells from the fragments, leaving us with a sample enriched in the target cells. An additional value we can provide is to use the same method to remove dead and dying cells from a normal cell sample. This leads to an entry market I'll discuss next. Single cell samples are often composed of normal healthy cells with an undesirable component of dead and dying cells. Removal of these dead and dying cells is of high value to many researchers using single cell sequencing and provides an easy entry into an unregulated market as a first step. We have talked to many researchers about this sample cleanup problem. Most protocols recommend that the sample consist of 90% viable cells prior to loading into the sequencer. This is recognized as a difficult goal for many sample types, and failure to achieve this goal can result in bad results for the actual sequencing, a waste of time, the valuable sample, and the high cost of the sequencing kit. So this leads to our entry market, research use only sales to the existing large and growing user base of single cell sequencers. We expect to be able to provide these users with a fast, simple, and inexpensive step they will use before processing their samples in a single cell sequencer. The product we're gearing up to sell is a small benchtop instrument that'll be in the lab with a single cell sequencer. We will provide single-use cartridges for sample preparation prior to loading the sample in the sequencer. Our instrument will sell in the $10,000 to $15,000 range and our cartridges for about $50. These costs are much lower than the sequencer and sequencing kits, and given the high quality improvement and results, we expect rapid adoption and fast growth of sales into this existing customer base. SynderBio is ready for the next step of providing beta units to selected customers and partners to use in-house to assess the effectiveness of our technology on their samples. We have signed up numerous leaders in both academics and industry. In particular, on the right are the major producers of single-cell sequencers. Upon completion of this beta test phase, we expect to be able to move into the strategic arrangements for access to their customer bases. This could include co-marketing, distribution, inclusion of our methodology in their technical notes, etc. The academic users will provide high-profile buzz prior to a product launch through talks and papers. And as a reminder, this is a first step. We expect it to be a very fast-growing, high-revenue first step, but precision cancer diagnostics remains our ultimate goal. This is an even larger market where we expect the high volume of samples processed by SynderBio single-use cartridges, along with the higher prices we can expect in this regulated market, to lead to even greater revenue growth as we help advance patient treatment. This is our team. We're happy to talk to you, anybody who's interested at their earliest convenience. And this is what we're looking for from you as our next step. We're targeting a $1.5 million raise to produce the beta units, carry out the evaluations, and prepare for a product launch. This is an 18-month plan, so you can expect to see some fast results for your investment. We're ready to go. This slide summarizes where we've been and what we've done. I look forward to talking to any of you interested in what we're doing at your convenience. Thank you for your attention.
All right, thank you, Mike. Okay, I'll pull up the poll for SynderBio. And Elder, you can set up your screen and we'll be ready in a few minutes. Okay, okay, 10 seconds left for the poll. Okay, fixing CO2, there you go.
Thanks, Pimpin. And thanks everyone for having us. Okay, let's close this poll. All right, hi everyone. My name is Eldar. I'm a co-founder at Fixing CO2, where we're building a reactor that converts CO2 into fuels and chemicals. We all know that CO2 emissions are a big problem. And it's not just one of the most challenging problems of our generation. It also is very urgent because we need to cut our global CO2 emissions by half by 2030. But the challenge is to make it in a way that is economical and profitable. So one solution is to actually use the same technologies that we use today, but convert the CO2 that they emit into something useful and then sell these products. On the other hand of the problem, we also, our economy is using a lot of things that are made from oil. In our everyday life, we use, some of these examples, we use them every day. And in order to go through the energy transformation and make these products in a sustainable way, we actually have to reinvent this fossil fuel pathways and find sustainable cycles for all of these problems. So the conjunction of these two big problems is giving rise to a new industry called carbon tech, where CO2 is used to build some valuable products that are currently made from fossil fuels. And the estimates are this is a $1 trillion market opportunity with a lot of growth potential. So the solution that we're proposing is using this carbon cycle where CO2 from industrial emission sources is taken and then is passed through our reactor that is using only renewable energy and water to convert CO2 into clean CO or carbon monoxide. CO itself is a valuable industrial gas that can be sold on its own market, but also mixed with clean hydrogen that you can also get from electricity. It forms syngas, and syngas can be converted into any petrochemical products using an industrially mature scaled process called Fischer-Tropsch synthesis. In fact, every arrow on this cycle is already an industrially mature process, except for CO2 to CO conversion, where this is where our technology comes in. So we have a unique technology for to drive this process. My co-founder Alma developed it during her PhD at UC San Diego. And this research was also funded by NASA JPL in efforts to build a human colony on Mars, where there's a lot of CO2 in the atmosphere. This is a chemical catalyst for the electrochemical CO2 conversion. It demonstrates exceptional results. And this technology is patented by UCSD, but we have an exclusive license for it. So once we scale the technology, it will look like this, an electrolyzer that can be modularly deployed. Once we hit the megawatt scale, we can process about 5 tons of CO per day. Because it's going to be on-site and modular, it's also going to be cheap compared to the existing sources. And of course, it's a clean technology that allows companies not just to get the CO or other products from CO, but also utilize the CO2 emissions. There's various applications for this technology. One example, as I mentioned, is the CO market itself, where it's used a lot in the chemical industry for production of other chemical intermediates. And they currently basically get all of the CO from steam methane reformers and then transport it. And because of this transportation and because it's a reactive gas, there's a high premium on the pricing. So our modular technology will not just allow our chemical industry customers to process their CO2, but also to get their CO at a competitive price. Another very interesting application is to help decarbonize the steel industry, which is responsible for 5% of global CO2 emissions, but is on a straight path for decarbonization. In fact, there's a lot of carbon neutral pledges by 2050 already from large players in the market. And when you make steel, you have a blast furnace, and out of this furnace, you have a gas that has a mixture of CO2 and CO already, and some nitrogen. So these large steel makers are already making ways to utilize the CO, and so they're already building that infrastructure. So if we come in with our technology to convert CO2 to CO, will definitely be a priority for any compared to any other CO2 utilization technology, because they already have infrastructure for CO. And this is, of course, a massive opportunity. And then finally, on the products, when I was talking about all everyday products that we use that are made from oil, for some of these industries like the aviation industry, it's really hard to decarbonize because the planes have been made to use carbon fuels for a very long time. So using synthetic fuels or using low carbon fuels is actually the only pathway for the aviation industry to decarbonize. So our plan is to scale our technology. As we scale, we can enter already some customers in the CO market, which is a $3 billion market, and then partner with hydrogen producers, Fischer-Tropsch technology providers to enter the $100 billion clean fuels market. We've already participated in several accelerators. We have a licensed IP, as I mentioned. We've built a lab scale prototype, and we've done a lot of customer discovery, over 50 interviews with potential customers. So our goal for 2021 is to build a kilowatt scale electrolyzer prototype and expand our IP portfolio in reactor design, and also find partnerships for early pilots. For that, we're raising a 1 million convertible note round. And we have a further scale-up pathway. As if we get to the kilowatt scale prototype, this is ready for some kind of early pilot test, but then we'll be raising our seed round to build a larger 100 kilowatt to megawatt system, and then further scale this technology for large scale applications.
Sorry, Eldar. Yeah, your time's up.
Okay, I'll just 10 seconds. So our team, Alma is the main developer of the technology. I have and she worked at Stanford and Caltech before finishing her PhD at UCSD. I previously had an AI company in Silicon Valley with an 8-figure exit in 2017. And Anna is also a Caltech PhD and helping us with engineering and scale up. We also have seasoned executives on the management team and top scientific experts in CO2 utilization. Thank you very much.
Okay, thank you. All right, we'll set up the polls for fixing CO2. And Frank from PainQx, you could set up your screen share and get ready.
Ari, I saw a question about the Opus 12 comparison. We have a slide on that. We can comment on in the breakout room after everyone has a chance to present. But that's a great question. Yeah, it is similar. And then so another question comparison to Opus 12. I can talk about all of that. I'll write down your questions and I'll see you after the event. Thank you.
All right, okay, I think Frank, you could get started. The polls finish up and I'll share the results.
Are we good?
Yeah. Yeah.
Okay. Hi, I'm Frank Manal. I'm founder and CEO of PainQx, and I'm here to introduce our digital health platform for the world's first objective measurement of pain. I'm excited to share how PainQx is changing the healthcare system as an AI-powered medical device company that's developed a next generation approach to objectively measure pain. When we talk about chronic pain, there's two things to consider. Number one, chronic pain is pervasive and it's very expensive. A third of any world's population suffers from chronic pain. And in the US, that equates to over 120 million people. That's more than cancer, heart disease, and diabetes combined. The other thing is the total aggregate cost of chronic pain, which per patient per year averages out about $10,000 per patient. When we speak of chronic pain, we need to understand that the problem really comes from the current inadequate standard of care, which is subjective patient self-report. This relies totally on the patient telling the doctor what their pain is, and both patients and the doctor struggle to differentiate on such scales. This leads ultimately to poorly managed patients, in that if you have an incomplete understanding of the patient's pain, that leads to uncertainty in dosing and titration. And the ultimate result is two results, neither of which are good. Either the overtreatment, which manifests itself in the US as the opiate epidemic, or undertreatment, which leads to untold costs and high suffering. Our solution is the PainQx system. And what we do with this is we've created a digital device platform where we take off-the-shelf hardware, meaning already cleared FDA cleared EEG headsets. We then run our neural analytics data through proprietary algorithms to produce an output to the clinician in real time with great ease of use and clinical utility. For both the patient and the clinician, the value proposition is quite simple. It simply allows doctors to properly diagnose and effectively treat chronic pain patients. We do this by guiding dosing and therapeutic decisions across the spectrum of interventions. We can track the treatment efficacy rather, and then we can improve clinical outcomes because of this. At the end of the day, doctors and insurers now have an objective tool to figure out honestly what works and what doesn't when it comes to chronic pain. Our go-to-market strategy is laid out in the following way. We are on a clear path to obtain FDA clearance within 18 months. From there, we see an initial research market within clinical research using our technology as a primary endpoint for pain. From there, we see our primary market as what we define as the physician's market in hospitals, elder care settings, and outpatient pain centers, mainly in use cases for opiate risk screening and stratification and interventional guidance. And from there, we are going to capture a whole new market on neural data analytics in regards to an objective pain point, which doesn't exist right now. The initial US opiate screening market, you can see here, is very large given the physician's market at about 25 billion. From there, the opiate risk screening market is about 8.2 billion. And we realistically expect to capture about 1.8 million in an obtainable market the first year. How do doctors do this? Again, the process, the economic model is as follows. The process begins with PainQx charging about $65 per assessment using the off-the-shelf hardware that I described. The capital costs inherent in that are quite low at about $1,000 per headset. Since we are basically a medtech SaaS solution, we have an extremely low cost of revenue of literally pennies per assessment on either a subscription or a paid per use basis. And this provides a win-win both for PainQx and the doctors and the insurers. We do have 3 existing CPT codes that we can use based on the 2020 Medicare averages. You can see there's quite a lot of room for revenue, both for PainQx and the clinicians that will use it. In terms of our competition and our unique advantage, PainQx is the only technology that uniquely focuses on what we consider the foundational element of pain, being neural activity in the brain. Other competitors are attempting to measure acute pain, and that is limited to autonomic and physiological inputs, and we go obviously beyond that. When we look to our history and where we are going, we are very proud of the fact that we have completed 6 clinical studies with a cohort of over 550 chronic pain patients. Our current stage of development, which points to our validation, are 2 sponsored trials, an NIH phase 1 and phase 2 study cohort of over 300 patients. And we've just been awarded a Department of Defense additional phase 2 study for 325 patients. What we are doing now is seeking a Series A round to complete our next step, which is a 400 patient FDA validation trial.
So, sorry, your time's
Sure, go ahead.
Please wrap up.
Again, everybody always says this, and it's true. We do have a world-class team, both on the business and the technical side. And what our ask is, we are seeking a Series A capital raise of up to $5 million. We do have over 2 million committed, both from individual investors and strategics, but we are seeking a lead investor to complete our milestones of initiating an FDA validation trial, obtaining FDA clearance, and then commercializing. So I thank you for your time and your attention.
Thank you. All right, I launched a poll for PainQx. And Galen, you could go ahead and set up your screen. All right, I'm closing up the polls for PainQx. Thank you so much. Galen, you could get started.
Great. Thanks everyone for coming out. My name is Galen and I'm a co-founder of Mark Labs. We empower institutional investors to track, measure, and improve their sustainability outcomes. Over $100 trillion exists in sustainable investments, and yet carbon emissions are increasing, income inequality is worsening, and over 1 billion people across the globe lack access to clean water. Why is it that we have more money than ever being invested to address these issues, and yet so little to show for it? Sustainable investment decisions are made based on fragmented and noisy data. Data providers have made billions, and yet 80% of asset managers are dissatisfied with what they're using. Financial institutions are under pressure to do better, and this is why Mark Labs exists.
The goal is not conclusive. It's basically like everybody else's.
At Mark Labs, we're developing an analytics solution for ESG and impact investing. We enable our clients to understand where they can strategically place their capital and engage their holdings in order to address the most entrenched challenges our world faces today, whether that's climate change, biodiversity loss, or gender inequality. Our initial target market is asset management. This alone is $1 billion opportunity, but that is only our starting point. We expect our platform to be used by governments, foundations, university endowments, and pensions, placing trillions of dollars into alignment with the SDGs. We create value in 3 ways. First, we enable our clients to quantify and report their impact while holding their investments accountable for their impacts. Trillions of dollars are being handed down to younger investors who demand impactful portfolios, making impact stewardship an essential part of increasing AUM. Second, we enable the management of risks and opportunities that are undetected by financial data alone. Our platform places a unique emphasis on financially material sustainability data that has been proven to influence returns. Finally, we save weeks out of the year for entire teams of people. We got our start with Techstars and completed a proof of concept with Barclays immediately after. We then earned the trust of the United Nations and the Gates Foundation and helped them manage the impact of one of their portfolios. We then completed a 6-month proof of concept with a large asset manager. We worked with their ESG team to understand their needs and develop our product's foundation. We're currently working with a large pension fund as we build out our tech stack, with the goal of securing a multi-year contract next month. As recently as last week, we've garnered interest from a large sovereign wealth fund and are in the process of securing them as both a client and a partner for thought leadership. Most importantly, we've built deep client relationships in the industry. With an extremely strong client funnel, we're prepared to scale rapidly following our full-scale product launch in Q3 of this year. Our competitors are providers of ESG ratings and text analytics. Ratings are inconsistent and leave major data gaps. Text analytics look at ESG-related news and assess it for sentiment, providing a marginal risk advantage at best. We're not just a team of technologists. We have industry experts on staff. We've conducted hundreds of interviews across the financial sector and completed a total of 8 months of POCs. We know that the industry wants transparent insights, not just another ESG rating. Additionally, the industry demands financially material sustainability data that has not been collected and structured at scale. That's until now. We're building a machine learning powered tool to automate the collection of this data. Finally, we're the only company building tools to facilitate active ownership. These tools allow us to build a community within our platform, creating network effects as we scale. We're operating in a vast market where the data and technology is still in its infancy. Our market is growing at a rate of 20% per year as the demand for ESG data becomes more sophisticated and more urgent. The primary way we generate revenue is through subscriptions to our software platform. We also license the raw data through APIs. Our third and final revenue stream is data take rates. When a client unlocks third-party data through our platform, we capture a percentage of the data provider's revenue. Our team is a combination of youth and experience. We have combined 50+ years of experience in ESG and impact investing, financial services, and technology. We're looking to close our seed round and have $250K remaining in the round. We'll use these funds to make key tech hires. We have 3 high caliber candidates who are already committed to our company and our mission. This round enables us to bring them on board, accelerate the build out of our platform, and convert our leads into paid platform subscriptions. If you'd like to become a part of progressing our work and our mission, feel free to reach out to me. Thank you for your time.
Perfect, thank you. Exactly on the 5-minute mark. That's quite amazing. Okay, I'll launch the polls. Vlad or Reservoir
Aaron.
team. Aaron, okay, it's Aaron. Okay, yeah, you could go ahead and set up your screen. Okay, Aaron, I think you can get started.
Hey everyone, I'm Aaron, co-founder of Reservoir Neuroscience, and the story of what we're doing, our vision is pretty simple. As you age, the blood vessels in your brain become leaky, and we now believe that this vascular leakiness is the biggest trigger of symptoms in the majority of Alzheimer's patients. So our vision in Reservoir is to tackle this unmet space and develop the first ever drugs designed to heal leaky blood vessels in the aging brain as a new treatment approach. If you're over 50 years old, half the people here are already at risk for showing vascular leakiness. We can see this loss of vascular health on contrast enhanced MRI, and we know that it's has a profound prevalence on the scale of Alzheimer's itself, but it's the earliest biomarker of aging to appear in the brain. So already in middle age, you'll start to show the signs of vascular leakiness, and then that progresses as symptoms develop and eventually turns into Alzheimer's disease. My co-founder Vlad and I did the breakthrough scientific work understanding this phenomenon. And this is our work's been published on the cover of Science Translational Medicine, which is the premier journal for drug discovery and development. And basically what we found is that once the blood vessels become leaky, this allows proteins from the blood to enter into the brain. And these blood-borne proteins, when they leak into the brain, are very potent inflammatory signals. So they turn on a very severe inflammatory process in the brain. That inflammation is the major driver of Alzheimer's. So as long as this crap from the blood is leaking to your brain, it's driving symptoms and leading the progression of the disease. Based on these breakthroughs, we realized that it's treatable, but the first problem we found is that as we dug into the biology, we realized that there's hundreds of potential mechanisms. If we wanted to make the first ever drug in this space, we didn't know what the best intervention would be to actually heal the blood vessels and cut off that source of damage in the aging brain. So to solve that problem, we went out and raised $1.5 million from Felicis and Longevity Fund, which are two really premier venture funds in the Bay Area. And we built the world's first ever drug discovery platform designed to allow us to identify the first ever drugs that can heal leaky blood vessels. This platform is a microfluidic organ-on-chip system. So we actually grow a three-dimensional blood vessel of all human cells inside of a microfluidic chip. It has real flow through it, and we can measure vascular leakiness in real time. We treat this system, and on top of that, we form the brain organoid, and so it has a full blood-brain barrier and brain system, and then we can just look at leakiness in real time of blood vessels and how diseased and pathological they are, how leaky they are based on tracer flowing through into the brain. So we treat this system, this organ-on-chip system, with the top disease factors in Alzheimer's patients at physiological levels, and we convert the whole blood vessel into a leaky state. We then test our drug candidates of interest and identify which drugs can effectively heal for the first time leaky blood vessels in the brain. This is our real world screening data. So, over the past year, we were able to build this platform, which is a real scientific breakthrough, and conduct our first drug screening. We found 2 candidates that far outperform everything else we've looked at and are able to completely heal blood vessels back to the healthiest state. We've been able to move forward on medicinal chemistry for one of these targets and develop a first ever drug candidate, which is able to intervene in this target. And we expect to file our first composition of matter IP for this new drug candidate this quarter. Really, we've been able to make this remarkable progress because we put together the world's kind of unique expertise around blood-brain barrier and vascular leakiness and how to treat it. And that's specific proprietary knowledge that no one else in the world has. We really have the team to do this. We're raising now. I think there's room for angels in this raise, although obviously the big checks are going to come from VCs. I like angels. I think you play a key role in the ecosystem, and you're a lot of fun compared to some VCs. So we've already closed a couple angel checks, and I think it's nice to have a chunk of angel funding in here. So, just time is of the essence. So let me know if you're interested in this. And then in parting, just want to say that our big vision is Alzheimer's, but there's over 40 other neurological diseases. So we're talking about a breakthrough treatment that can address this kind of vascular leakiness across several unmet neurological diseases. And that also gives us a path to easier clinical trials to start with. So thanks for your time. Looking forward to connecting with anyone who's interested in neurospace after the sessions.
Thank you, Aaron. Okay, I'll launch up the polls for Reservoir Neuroscience. Let's see. So Jamil, you could go ahead and set up your presentation. Okay, Jamil, please start.
Okay. Can you hear me?
Yep,
Okay.
perfect.
Right. Hi, I'm Jamil, co-founder and CEO of Advanced Microbubbles and a biocolloid expert. Our platform aims to solve that age-old problem in cancer chemotherapy, where less than 1% of injected drugs can penetrate the tumor owing to biological barriers such as the blood-brain barrier in the brain or the tumor endothelium barrier. Now, this contributes to the secondary problem where the high doses of drug needed to treat the tumor is just so toxic that it's harming the patient as well. But we have a powerful solution. The use of ultrasound-triggered microbubbles proven to be safe for diagnostic imaging, which we've now optimized to solve cancer drug delivery. Let's take a look at how it works, courtesy of a video. It's very simple. Our proprietary microbubbles are injected into the systemic circulation together with the drug of choice, which can be a gene therapy, immunotherapy, or nanoparticle drug. Now, our microbubbles are designed to last up to 30 minutes in circulation. At the specific site of the disease, on the ultrasound, the microbubbles will vibrate really fast at the frequency of the ultrasound, expanding and shrinking to create powerful mechanical and fluid forces that overcomes the biological barriers and pumps the circulating drugs deep into the disease site in a manner that is simultaneously safe, non-invasive, and targeted. We are the only company in the world that makes the holy grail in microbubble engineering. Microbubbles are both uniform in size and also stable in circulation for up to 30 minutes. Our proprietary monodisperse size-isolated microbubbles. These microbubbles provide unprecedented control in cancer drug delivery and also solve the problems found in the conventional diagnostic imaging microbubbles, shown on the left. That's why they all come to us. We published a proof of concept in collaboration with the NIH, showcasing the capability of our SynderBio technology. The target here was a rat brain, and the first image you're looking at is the control, basically drug delivery as it's done today. And you can see after injection of a fluorescent drug, there's not really much penetration on that near infrared. But when you compare it with the use of the same drug and our technology, voila, you can see clear penetration of the drug in white. And this was at least 10-fold greater than with the use of the conventional diagnostic imaging microbubbles. We're able to follow up this exciting result recently by exploring the possibility of treating cancer in a much safer manner, targeting a rare disease cancer and using the drug liposomal doxorubicin as a proof of concept. For the first time, we're able to show that we can halt tumor growth using a very low and safe dose of chemotherapy, 1 mg per kg, all without any observable side effects to the specimen, such as loss of motor function or weight loss. This effect was not possible using low-dose chemotherapy alone. Now, this holds promising clinical implications, as it means chemo can change from what it is today with its terrible side effects to one where we envision it can be, finally being able to cure the cancer without killing the patient. We anticipate expedited approval with the FDA via the 505(b)(2) and the orphan drug pathway, which should cut our time to market to 2 to 3 years. So our platform strategy is to market our SynderBio technology as a companion therapeutic for a wide range of injectable drug candidates. We'll start out by pursuing the orphan rare disease indications in-house and then expand to more prevalent cancers and neurological conditions via partnerships with pharma and also via partnership with the companies that want to work with us based on independent validation. We expect we can charge a premium for our procedure based on the expected cost savings to the patients and to the clinics. And we are seeking an exit via acquisition via pharma. Our team consists of a unique combination of over 30 years experience in both microbubble and ultrasound theranostics. We are supported by an excellent advisory board consisting of Dr. Juan Vidal-Jove, experienced in performing over 200 clinical cases of the use of ultrasound to treat cancer. We're currently raising a 500,000 convertible notes with the terms already set, and the funds will be used to complete our preclinical efficacy studies and for some hiring. And this will be followed up by a Series A IND-enabling studies with the goal to perform phase 1 clinical trials in a rare disease cancer in 2022. Thank you for listening. I've been Jamil Feshitan with Advanced Microbubbles, and together we can make an impact in the lives of future cancer patients.
Thank you so much. All right, let's get the polls for Advanced Microbubbles started. And Conrad, you could go ahead and set up your screen share. Okay, Conrad, I think you could get started.
Okay. Hey everyone, my name is Conrad. I'm the CEO and co-founder of WearLinq, and we're creating a platform for cardiac care enabled by our stretchable ECG wearable. As you can see, there are two pieces, one stretchable patch and one transmitter. It's recording the EKG continuously and transmitting to the user's phone in real time so they can also see everything, report their symptoms, and get some instant interpretation of the signal with AI. But most importantly, we're going to pair this with our own cardiologists so we can create these summary reports based on the user's recording period, and then have a cardiologist look at that and give them treatment and diagnosis decisions. So it enables us to have a more full service offering than all current companies. What they do is they basically just provide you this service of report generation for the cardiologist. So it has to always have a cardiologist in the loop, which means the process for the patient looks like this. You have symptoms, you go for your GP visit, you get referred to cardiology, so you wait again for that. And then you finally have a monitor prescribed that records continuously, usually up to 14 days, which you physically have to mail back to the company that gave it to you, so they can download your data, create a report, and then you finally have your follow-up with your cardiologist to have some results. In many cases, in like 30% of cases, you need to redo this prescription because not enough time has been recorded. And afterwards, you're left on your own for management because you've sent the device to be used back. So there's no way to keep checking on yourself. If you make a more consumer-friendly solutions like we do and pair this with our own cardiologist, you can go now over the counter and through primary care instead, which shortens this journey significantly, which is amazing for the patient, but also saves money for insurance companies and lets us reach people way before current solutions do because they all go through cardiology, while letting patients keep the device and keep using that for management if they want to, and we can bill for with existing CPT codes. Now's a great time for a company. Telehealth has its boom because of COVID. We enabled telehealth for cardiology with our offering of device plus cardiologist. And there's also some really favorable reimbursement changes in place specific to external ECG monitoring. Second thing is consumer behavior. People buy Apple Watch and Fitbits, all kinds of wearables to learn more about their health, but they still don't provide that much information. We're going to solve that with our device that's based on my co-founder's research in stretchable electronics. We eventually want to create a device that's fully stretchable, like a second layer of skin or an e-tattoo. It's going to record multiple parameters continuously, stream to your phone. We can have an AI analyze that, provide insights, and move healthcare to a more preventative way of operating. Initially, we're going to start in cardiology, though, as I mentioned before. I'm going to put up the competition on two axes. One is just very high level because there's not enough time, but one is the diagnostic yield, which is how valuable the solution is clinically. And second one is patient empowerment, how good this is to empower the patient's daily life. And so you have Holter monitors, Zio patch, body patch-based devices, and then you have implantables, which are longer term, and they move up based on how long they monitor or the quality of the signal generally. All of these are continuous though and record the EKG 24/7 when they are on the patient. The consumer devices are owned by the patient and are connected to their phone so they can see everything, but they're always requiring an action to get a recording. So they are limited to 30-second snippets, which are great for the patient to check on themselves, but not good for the cardiologist when they want to make actual decisions. We're going to combine that and basically have a clinical grade solution that goes and is connected to the app where the patient can see everything, and most importantly, has the cardiologist attached to them. This lets us go to market over the counter and to telehealth companies. It lets us also have this beachhead is $300 million in yearly revenues. That's how much iRhythm is making. That's one of the patch companies from the previous slide. They're a $6.5 billion public company with revenues of $300 million per year. Biotelemetry, another company, just got acquired last month by Philips for almost $3 billion. Similar revenues. They all go after this initial diagnosis population, 4.5 million people yearly. It's a $4.2 billion yearly market for us. If we include other indications, there's a very clear expansion path to emergency response for more acute conditions like sudden cardiac arrests. It's a $50 billion per market plus $50 billion per year market. Team, I have a master's degree in engineering from Stanford. My co-founder Yushin, PhD bioengineering from Stanford. AJ, cardiologist at Stanford with an MBA as well. Alexis, master in computer science from Stanford. Fouchao, PhD electrical engineering from NTU in Singapore. Advised by, in part, Professor Bao, started Stanford Chair of Chemical Engineering, Director of Wearables Electronics Initiative. Ashley from iRhythm previously on the commercial side. Rory, iRhythm previously on the regulatory side, helping us with our FDA clearance. Ashwin, previous exit in a similar space as an entrepreneur, CEO of that company. Jack, professor at Stanford. We just closed a bridge round that's going to get us through on our IRB study. Basically 20 people wearing our device. That's going to prove out our hardware fully and also reduce the risk of our FDA clearance. That's going to be done in a month and a half. And then we're going to raise a seed round of $3 million for 18 months to receive this FDA clearance and scale to 500K in quarterly revenues over the counter and to tell out. So some risks, the device is going to be proven out by the IRB study in the next month and a half. So is the FDA clearance. This is the only clinical thing we need to do for the FDA clearance. That's going to be ready in a month and a half. And then on the market side, we have a clear path to the 500K. One is we had 150 people pre-purchase our device during 1 month, and that so we know how much we're going to pay to acquire customers, and we have an LOI from a telehealth company and a strategic that's going to invest in our seed round. Thank you.
Thanks, Conrad. All right, I'll set up the polls for WearLinq and our final company, Aether. Ryan, you can go ahead and set up your screen share. Okay, Ryan, I think you could get started.
All right. Actually, am I muted? Can you still hear me? There we go.
Yeah, I can hear you.
All right, wonderful. Good evening, everybody. I appreciate you all sticking with us here. It's 9:45 on the East Coast. So excited to share a little bit about what we're working on here at Aether. My name is Ryan Shearman. I'm the co-founder and CEO of Aether. And as you may have heard earlier in the night, we, humanity, are currently facing quite an existential challenge. The increasing concentration of CO2 in our atmosphere is probably the most existential threat facing humanity at this point. If we don't cut global emissions in half by 2030, the chances of limiting global warming to 2 degrees C is all but impossible. And beyond that, there's a greater challenge, legacy carbon that's been pumped into our atmosphere for the last century. And once carbon is pulled out of the air, we know that natural climate-based solutions are one major factor in this grander equation, but we also know that tech-enabled solutions must play a role in order for us to hit our goals. And utilization of that carbon is something that's really important. That's what we're focusing on here at Aether. So we transform atmospheric carbon into diamonds. And essentially, when we were looking at carbon capture and utilization, we said, what is the most enduring form of carbon? What is the most valuable form of carbon? And we landed on crystalline carbon, otherwise known as a diamond. This is a permanent sequestration of atmospheric CO2. What we're able to produce are the highest gem quality grade stones. So these are akin to what you would use or what would you buy from brands like Tiffany, Cartier, Van Cleef & Arpels. We launched on December 21st. We already have over $1 million in pre-orders booked, and at scale, gross margins are north of 90%. Margins at launch are closer to about 75%. Our team brings a blend of really great expertise from the jewelry sector, sustainable fuels. We've built and scaled and exited direct-to-consumer brands of ourselves, and collectively on our management team alone, we've developed and shipped hundreds of millions of dollars worth of fine jewelry for leading global brands like David Yurman, Pandora, Harry Winston, Mikimoto, Swarovski, just to name a few. Now, why now? The timing for this is actually really, really great for a number of different reasons. We have a few different tailwinds kind of moving all in concert with one another. First and foremost, this wasn't possible up until when we founded the company. Scalable direct air capture hardware really was just coming online in the 2017, 2018 timeframe when we first got the idea to make diamonds from thin air. At the same time, the diamond supply is shrinking. When you open a diamond mine, you know what the mother lode of kimberlite looks like. You know how long it will take you to dig up that kimberlite. And we now know that by the year 2040, 70% of all diamond mines operating on the planet Earth will be closed. That will be responsible for limiting the global production of diamonds by 50%. So if the global supply cuts by 50% over the next 20 years, but demand continues to grow year over year, we need to backfill. And that opens up a really wonderful opportunity for the future of this industry to be controlled by man-made diamonds. We also have a favorable regulatory landscape. The FTC, as of last year, now recognizes lab-grown diamonds as atomically identical. They are no longer synthetic. They are real diamonds. We can market them as such. We also think there's some really advantageous opportunities with the new administration coming into office. And perhaps most importantly, consumer adoption is here. When we started this company, we were tracking consumer adoption of lab-grown diamonds, and it was really starting to hit its stride. That was actually massively accelerated during the pandemic. There's kind of a forced function when you're living with someone that you really care about and you're locked in your house for a year. And what we saw was a huge uptick in the number of engagements, not only here in the United States, but really across the globe. And with jewelry stores closed, that drove engagement ring purchases and diamond jewelry purchases online, where e-commerce has typically favored lab grown for a number of reasons, mostly consumers getting more bang for their buck. 2/3 of all diamonds purchased last year were by Gen Z and young millennial consumers who actually vote with their dollars for the first time and seek value alignment from the brands that they buy. And now we're giving them an opportunity to vote with a luxury brand that brings those same values to market. There are some fundamental problems with existing lab-grown diamonds. I'll be the first to tell you that we think they are a step in the right direction. Right? Digging a giant strip mine in the ground, no good. But there's really nothing romantic about lab-grown. Luxury brands haven't touched them. Dirty production in Asia. There's a number of different reasons that the void of a unique story really goes against them. And this is where we shine. Our diamonds are the only ones that directly reverse climate change. Every carat of diamond we produce permanently removes carbon from the environment. We don't waste any water. We don't permanently remove any earth. We only use our sustainable atmospheric carbon instead of sourcing our carbon from fossil fuels. And we have net negative emissions to the tune of 20 metric tons per carat sold. This gives us the opportunity to target the higher end of the market, the same luxury and exclusivity and high quality that you'll find from brands like Tiffany, David Yurman, Cartier, with fully sustainable practices and materials. We find sustainability to be a mark of true modern luxury. Look at Tesla as an example. Great IP portfolio. Reactor recipe is going to be kept a trade secret. That's part of our secret sauce. Some important trademarks and copyrights. We're going direct to the consumer first until production capacity allows us to then cater to B2B. We've got some really great traction out of the gate, some really great press reception, and we're excited to lean in and maximize our environmental impact as we scale, raising 1.5 million on a safe. We've got 500K remaining, actually 250 as of today. We believe that we're well on pace to hit 5 million in revenue top line this year and hit our goal of 1 megaton of CO2 removed over the next 18 months. Thank you very much.